Good morning, everybody, and welcome to our show, Mortgage Rates Today. I'm going to be your host, Garrett-Tyler, and I have my friend and real estate agent and real estate expert in San Diego, Noah Grassi, with me. We are on a 30-year fixed interest rate for October 12th. Today's rate is 7.14%. Man, that rate keeps going up, Noah. It's not getting better on us.
Sure does.
I mean, it's a tough market out there, but I think we have a solution to kind of talk to people about mindset and what they can do with their properties for potentially being able to sell. So I know you have a property for us somewhere here in San Diego today. Where's that at?
We are headed down to Pacific Beach, Crown Point, and you can sit on the balcony in your chairs and watch SeaWorld fireworks.
Well, perfect. Let's hop right into it and put this rate to the test. How about it?
Sounds good. Let's do it.
All right. So as we said, right, today's rate is 7.14%. Remember, this is an interest rate that we derive from Mortgage News Daily. Anybody can go look up this interest rate, Google Mortgage News Daily, and it's a website that really consolidates all of the mortgages that are being sold on the secondary market and where the average 30-year fixed conventional mortgage is being sold on that secondary market. So with an average today, you'll see that we keep ticking up a little bit, and that's because, right, we've continued in this high inflationary market. Price and values of homes have technically stayed there. And so what we've seen, right, is with inflation increasing, interest rates have to increase. And the only way to bring these interest rates back down is for inflation to slow down. So we're going to have a lot of outside policies that are going to be affecting our rate, like the decisions our Fed head chair is going to be making, the decisions that other industries are making with hiring and firing. Until we get inflation under control, we are not going to see these rates come down. And that's what our economy is currently trying to do. So as a 5-year snapshot, you can see we are at the highest point in the last 5 years. And what this has really done is caused a question for sellers and buyers. Are we in an affordable market right now? Is it still a smart decision for me to buy? And the simple answer to that, I believe, and you and I will have a big discussion on this right now, is where is the seller's mindset? Where is the buyer's mindset? Because we both believe values are strong in San Diego. We shouldn't see a depreciation market comparative to the previous year. We should maybe see it slowing down in the levels of appreciation, but values will relatively stay there, and if not increase as we go into next year. But interest rates, man, like we talked about, keep getting high. So what do you see out there at being the expert, Noah, in San Diego, and the seller's mindset of getting buyers to accept home purchases?
Yeah, so sellers are armed with the information that we're seeing about rates and the changes in the market. So when I'm meeting with my sellers on these listing appointments, one of the topics that we are discussing is this jump in interest rates that we had earlier in the year and how that's impacting the buyer's pool motivation, their affordability, and then what strategies we can do to offset some of these higher rates and make our property attractive to buyers. In the old market, you had some sellers, they had resistance to giving credits. Their attitude was kind of like, why am I giving up some of my sale price, or why do I have to help this buyer buy the property? Or by me giving a credit, does that mean if the buyer needs it, does that mean the buyer isn't as strong as someone that doesn't have to ask for it? So you had some resistance from sellers willing to do that in the past. Today's market, as I'm discussing things with these sellers, they're a lot more open to finding ways, creative ways, and credits and interest rates buy downs that we're going to talk in a minute to put these deals together and to make their property more attractive. Obviously, no seller wants to do price reductions and discount their price. So if there's a strategy before doing that we can put in place to give a seller an opportunity to attract buyers, it's a great strategy and really a win-win for seller and buyer.
Yeah, 100%. I mean, we've gone through 2 years, right? 2020 and 2021, where we had about, in San Diego, 30% appreciation in 2020, about 20% appreciation overall so far in 2021. And we're on track again, close to the 15% in 2022. So sellers have equity. They've gained a lot of equity, especially if they've been an owner for the last 2.5 years, that they have that position to where they don't have to negotiate their price reduction large down necessarily. They can offer a seller credit to get a buyer motivated to purchase and maybe lower that buyer's interest rate. They have the equity because of the appreciation rate, run up that we've had. So we really got to shift that thinking of, oh, I'm giving away some of my equity. Well, no, you've gained so much at this point that it's coming down into a realistic market. And now it's the time where we offer seller credit to get buyers to stay motivated.
Very true. And, we talk a lot about timing the market. You see it in stock market, you see it in housing market. Obviously, everyone wants to buy low, sell high. Well, right now we're in a position where we've got enough data coming out from early part of summer that looking back, that likely might be our high point in San Diego. Now, what's next? Is it a drop down? Is it a plateau? That's debatable. But when you meet with these sellers and they say, okay, I realize I just missed it. It's kind of right behind me. But what I don't want to do is ride this thing down. So they're agreeable. They're motivated to say, hey, I know I just missed it, but what can I do to make my property attractive to get this sold and not go on this lot of market time and price reductions and chasing things the wrong direction? So much more agreeable mindset out of sellers in today's market. They're armed with the information. They understand things have changed. They understand the challenges buyers are looking at with rates, and they're willing to kind of play ball and put something together that works for everybody.
Yeah, 100%. Couldn't have said it better. So I know you have a property for us here in Pacific Beach. How about we go shopping and take a look at your property?
Let's do it.
All righty, let's go. All right. So go ahead.
All right. So yeah, we're down in Crown Point here in Pacific Beach. This is right on the bay. So you've got views to the wetlands there. That's Bay Park in the distance, then SeaWorld all the way to downtown. Very cool setup from living room and kitchen. You get all these views, little patio outside you can sit on. It's a top floor, 2-bedroom, 2-bath condo. End unit, so your bedrooms have no shared walls. It's always a problem on condos and townhomes is noise transfer. Well, this one here, you got a lot of privacy being top floor and at the end. It's also got 2 side-by-side parking spaces down below in the gated garage, laundry in unit. Just a cool setup, very walkable location. Right out the door, you're at mile marker 0 for the bike pass and the walking and jogging past the Crown Point. So it's just endless options. These clients lived here for about 6 years. They're relocating back to Hawaii, where the husband's from. He's an artist. You see some of his artwork in those photos. So very cool setup.
Yeah, I love an end unit. An end unit always makes the angles of a house look cooler.
Yeah, you get some options. It's not that like traditional boxy floor plan. So it's got a little more character with that.
Well, perfect. Let's go put that rate to the test and kind of see exactly how a buyer would be able to purchase this property if they were buying it from your seller, right?
Sounds good.
So if today they were able to capture it at your seller's list price of $1,049,900, we're going to use an example of a buyer having about 20% down and going through a conforming loan option. So at 20% down, that borrower would save, right, for $209,980, leaving their loan amount for $839,920. Remember, we're using Mortgage News Daily's average 30-year fixed interest rate. So all the different qualifications specific to you, like your FICO score, how much you have down payment, what's your debt to income ratio, will affect this interest rate. But this is the average that you should be seeing on the market, and that's about 7.14%. The principal and interest payment. So remember, this is just that loan payment of 7.14 on the loan amount. That's $5,667. That's not going to be the only thing that makes up your mortgage payment, right? So you're going to have real estate taxes. So right now we're using an average of about 1% here for San Diego. That's going to leave the payment at $875 for the government per month. Then we're going to have homeowners insurance. And because, Noah just walked us through, this is a condo. It's going to have its own separate HOA, which is going to have a master insurance plan. So our personal homeowners insurance that we're going to have here can be a little lower because there's a lot more protection of insurance within that master association fee. So insurance on this property, you could find anywhere between really $30 and $50. So you'll see our average is about $44 here. There's no mortgage insurance, right? Because we hit 20% down on a conforming loan. So no mortgage insurance is necessary. And that leaves the last fee being our HOA fee of about $525. So with $525 in HOA, you're probably getting a good amount of amenities with the property. It's probably well upkept with the maintenance and the association. So the all-in payment for a property here, if the buyer was getting this at 1.049900, the all-in payment we'd estimate is about $7,111. 7111. That's cool how that came out to that. So that's a high payment when we know that. And this is kind of where, Noah and I were just first describing to all of you the opportunity of receiving a seller credit to help buy down a buyer's interest rate. So there's a strategy out there, and we'll do a separate segment, and we won't have to dive into all the details now. But in essence, you could go through a 2-1 buy down strategy where for the first year, you could buy the interest rate down with about a $15,000 credit from the seller to 5.14% for the first 12 months. That overall would drop that principal and interest payment from the $5,667, right, to about $4,581. So that difference in payment would be $1,086 for the first 12 months on the property. So that's how a 2-1 buy down strategy typically works, is that it takes the starting interest rate of 7.14%. Then for the first 12 months, you're going to actually be paying at 5.14%. Then the next 12 months, you're going to be paying at 6.14%. And then after 24 months, it adjusts right back to the 7.14 for the remainder of the life of the loan. The credit that it would take typically to receive from the seller to buy down and do this strategy to lower the rate to 5.14 for the first 12, then to 6.14 for the second 12, that would typically in this example be anywhere between $15,000 to $20,000 in a seller credit. But like Noah and I were just describing, right? A lot of the time when you see a property potentially sitting on the market, the first strategy is to do a large price reduction, a $50,000 price reduction, or maybe a $75,000 price reduction. Well, in this case, you wouldn't have to necessarily do that, right? You could potentially offer a $15,000 or $20,000 seller credit, and you would be able to provide that credit to the buyer, which would be less than dropping the purchase price by $50,000 or $75,000, right? And that overall payment for the buyer would still be significantly better with just the $20,000 credit as opposed to a $100,000 price reduction. And so that's the importance of a 2-1 buy down strategy in a market where rates are continuing to kind of hover at a high level, and if not continue to increase with new inflationary numbers coming out later this week. So this is a strategy that, Noah knows very well. I know very well that we would be coaching all of our buyers and sellers that, we would want to offer a seller credit, not a large price reduction, to keep payments right now affordable for buyers. And that's where, we see motivation in being able to keep, our economy moving with purchases.
Makes sense.
Yeah, that's kind of the game plan here. So, whether you're starting your home journey right now or you've been doing it for a while, just know that getting this information, figuring out your financial snapshot, talking to an expert like Noah who knows all the ins and outs of real estate in San Diego, talking to a mortgage expert to understand your financial snapshot, what's your credit, your income assets look like. We have a 90-day game plan that any of you can sign up for. We'll drop the link in the comments here today. But really, the 90-day game plan is just going to teach you how to get yourself prepared for home ownership. It doesn't take 90 days. 90 days is really the timeline we see for first-time home buyers going through the process, but it can happen really quick. You can call Noah, you can call me at any point, and we can get this process started for you in 24, 48 hours. But really, it's an opportunity for you to just for free, understand where you currently are in your home ownership journey, whether that's a first-time buyer, second-time buyer, or even if you're just a seller and you want to understand how would my property be sold in this current market and what could I gain from that. Noah can easily help you run those numbers, and we could showcase that property here. So, don't hesitate to subscribe this show. We do this every single day. We bring in experts around the nation, just like Noah, who is a top real estate agent, 1% in San Diego here. So I know Bill loves doing what's your last word. So Noah, if October 12th, what's your last words for the buyer and seller mindset here today?
The market is changing, but it's still moving. Another listing in PB. We're inside of a week, 3 offers in. This will be going to escrow later today. So there's buyers out there. There's sellers coming to market. We have not come to a screeching halt. So work with your lenders, get creative on options, find the comfort zone. Sellers are agreeable. There's still a lot of deals to be had out there.
Yeah, 100%. Couldn't have said it better. I agree. I mean, we're seeing, like you said to me, those are 3 cash offers potentially on that property too. So this is the market that a lot of buyers were hoping for. Less competition. And what are we seeing? Well, now we're seeing cash offers come back, and cash buyers want to come jumping in because there is that less competition. So as soon as we see rates start dropping, I do believe our demand is going to continue to keep up those home values, because there's a lot of people that are pre-approved right now waiting for rates to drop. So yeah, everybody, thank you so much for joining Noah and I here today, and we will see you all tomorrow. Have a great day.
Thanks for having me. Enjoy your Wednesday.